VT's 66% crush VXUS is 49% over 5 years, but VXUS just reversed that dominance this year. VT's crushing it with 66% returns, beating VXUS by a commanding 17 percentage points over 5 years. VXUS crushed it recently with 27% returns, outpacing VT's 22% over the same one-year period. VT won the long race with steady consistency, but VXUS came roaring back at the finish, showing how international markets can surprise you. VXUS is winning on risk-adjusted returns, delivering 1.4 sharp versus VT's 1.1 over 1 year. VT's half-point sharp ratio beats VXUS's 0.4, better returns for the risk you're taking over 5 years. VXUS protects downside better with a 1.7 Sortino ratio, edging out VT's 1.3 this year. VT's higher Sortino ratio means it protected investors better during market downturns over these 5 years. Think of risk-adjusted returns like report card grades. VXUS did better this year, but VT's maintained a stronger 5-year GPA overall. VXUS's 0.7 beta means it moves less with U.S. markets than VT's 0.9, offering you better diversification independence. VXUS gives you real diversification with 0.8 correlation, while VT just mirrors speed perfectly at 1.0. VT's perfect correlation means you're basically just buying SPY with extra steps. VXUS actually provides real diversification. VT and SPY are dance partners moving in lockstep, while VXUS does its own thing when U.S. markets stumble. That's diversification in action. VT's 26% drop was gentler than VXUS's 29% crash. That 3-point cushion matters when markets tank hard. VT bounced back over 3 months faster, recovering in 474 days versus VXUS's 580-day struggle. That's over 3 months your money stayed stuck underwater. Real opportunity cost that VXUS investors just couldn't avoid. Think swimming pool depths. VT pulled you 26% underwater, VXUS dragged you 29% deeper, and you held your breath 100 days longer. VT's built for the long haul with 66% 5-year gains, while VXUS shines recently with 27% 1-year returns and real diversification from U.S. markets. VXUS delivers nearly double the dividend income at 3.1% compared to VT's 1.8% yield annually. VXUS pays 3.1% dividends versus VT's 1.8%. That's 72% more income compounding in your favor yearly. VXUS delivers $3 in dividends while VT gives you less than $2. That extra couch change really adds up when you're living off income. VT's 26% tech weighting is far heavier than VXUS's 16%. That's a huge concentration difference to consider. VT's 60% U.S. allocation means it's basically a domestic fund with some international flavor mixed in. VT's higher PE ratio reflects its U.S. exposure premium, while VXUS offers international stocks at a meaningful discount. Think of VT as 60% pricey U.S. pizza, 40% international. VXUS, that's pure international slices at bargain prices. Simple geographic diversification. 1 basis point difference in expense ratios? That's basically identical. Cost won't be your deciding factor here. VT's your moderate play, balanced global growth with lower drawdowns. VXUS, that's the aggressive international pick with real diversification. Think of it like road trip planning. VT's the main highway hitting U.S. companies, while VXUS takes the scenic international route with higher dividend stops. This disclaimer protects both of us. Always do your own research before investing. Want more weekly battles? Hit subscribe for data-driven comparisons, clear winners, and honest analysis every week.